Taking a look at interest rates today, 10-year was a big mover today. We saw a big reversal in the 10-year settling right around the 1.2320 level. So again, quite a move. And we see the range for the day, 1.24055 on the high side, 1.23180 on the low end. So selling just off of the lows of the day. Again, as I pointed out, that reversal continues from last week. We saw a high in the 10-year last week. Now coming out of it, 3 straight down days for the 10-year. So we're seeing again some downside pressure on the bond, the 10-year bond, and with that, yields moving higher. 10-year yield now 2.494 for the day. Big range. We saw 2.415 to start. So that range, we saw the 10-year yield up better than 3.25% for the day. Also, I want to point out the backwardation or the inversion of the yield curve, I should say, when you look at the 3-month, 10-year. Got a lot of attention last week, brought out a recessionary talk from a lot of people around the media and traders alike. Again, we're seeing a big reversal there, and so now we're seeing that 10-year back above the 3-month yield. So 3-month actually yield was down on the day, 2.38 with the 10-year at 2.49. So about a 10 or 11 basis point spread there now as we see this market adjusting for some of the dynamics. And really it kicked off last night when we came to some of the data points. China, the Caxton Manufacturing Purchasing Managers Index back in the growth category. Now they had expected to be around 49.4, and that's where it had been last month. That's actually a contractionary type of reading, but we saw 50.8 on that number, and much stronger than what the market anticipated. So if we continue to see some of the stimulus activity in the China markets continue to unfold here, I think that's why we saw this reversal in yields overnight. And we got some numbers out of the U.S. as well. Retail sales. Now, headline numbers a little disappointing for February, but the revisions were quite significant to the upside. So really, all in all, they counterbalanced each other and kept the momentum in the equity markets moving higher, and also kept that momentum in the bond markets when you saw yields moving higher, prices moving lower for the day.